What if I told you that a group of anonymous internet trolls posting memes, jokes, and wild speculation managed to cost some of the richest people on Earth billions of dollars, not through insider trading, not through clever financial engineering, but with sheer chaos, coordination, and viral humor? What if the very system designed to protect wealth and power was momentarily flipped on its head, exposing vulnerabilities that few even knew existed? And the real mystery? Was this just a fluke, or a sign that the financial elite are no longer untouchable? Welcome to Dollaroid. Today, we re-diving deep into a story that seems almost too strange to believe. How internet trolls, ordinary people, armed with Reddit accounts, memes, and a sense of mischief managed to shake Wall Street to its core. But before we get to the viral posts and the shocking losses, we need to understand the stage on which this drama unfolded. Our story begins with GameStop, a struggling video game retailer. In 2019 and early 2020, GameStop was widely considered a dying company, facing stiff competition from digital downloads and online marketplaces. For hedge funds, this presented a golden opportunity, not to save the company, but to profit from its decline. Short selling, the practice of betting that a stock will fall, has existed for centuries. Wealthy investors could sell borrowed shares, expecting to buy them back cheaper later, pocketing the difference. It's risky, but when used at scale, it can yield massive returns. One fund, Melvin Capital, took enormous short positions on GameStop, assuming the stock would plummet. Meanwhile, a corner of the internet called Wall Street Bets quietly noticed something unusual. GameStop was heavily shorted. More shares were sold short than actually existed. This created a rare vulnerability, a financial pressure point known as a short squeeze. If the stock price rose instead of falling, the short sellers would be forced to buy shares at higher prices, driving the stock even higher, a cascading effect that could inflict catastrophic losses. At first, the posts on Wall Street Bets were a joke. Trolls and amateur traders flooded threads with memes, apocalyptic rockets, cartoon apes, and slogans like "Hold the line," mocking billionaires who assumed retail traders were disorganized and emotional. But behind the memes was a latent power. Thousands of people, coordinated actions online, buying shares not because of fundamental analysis, but because they could collectively influence the market. As buying pressure increased, the inevitable began to happen. Hedge funds like Melvin Capital started losing billions almost overnight. The stock price exploded from roughly $20 per share to over $400 at its peak. Social media had become a weapon, and ordinary internet users had flipped the script on some of the most sophisticated financial players in the world. But the chaos didn't last. The breaking point came when trading platforms, most notably Robinhood, suddenly restricted the buying of GameStop shares. Retail traders could sell, but not buy. Official statements cited clearing requirements, but the effect was undeniable. The squeeze collapsed. Hedge funds reduced their losses, and many retail traders who had held on saw their gains evaporate. The wealthy were largely protected, and the crowd that had momentarily seized power faced a harsh reality check. The fallout was enormous. Capital required a bailout. Congressional hearings were convened. Lawsuits were filed. Public trust in market fairness plummeted. And yet, the deeper story wasn't just financial, it was cultural. Internet communities realized they had real-world influence. Meme-driven markets appeared in cryptocurrency, NFTs, and even other stocks. Dogecoin, once a joke, soared because of coordinated social campaigns. Other retail-driven squeezes attempted to replicate the GameStop phenomenon with mixed results. And yet, despite the chaos, the system adapted quickly. Hedge funds built rapid response teams to monitor social media sentiment. AI algorithms were deployed to anticipate viral market moves. Short-selling strategies were recalibrated. The elite had learned from the crowd, absorbing the lessons and reinforcing their positions. In the end, the trolls' victory was temporary, but the warning was permanent. The traditional walls separating ordinary traders from elite financial institutions were no longer absolute. This pattern is not new. History is full of examples where ordinary participants briefly influence markets: the tulip mania of the 17th century, the South Sea bubble, or even parts of the 2008 financial crisis. Each time, a surge of speculative activity created temporary chaos. only for institutional mechanisms to reassert control. GameStop was the first example of this cycle occurring in real time. In a digital social media-driven era, magnifying the speed and scale of the disruption. Shocking data highlights the scale of the disruption. Estimates suggest institutional investors lost over $20 billion during the GameStop squeeze. Retail traders collectively lost billions afterward when prices crashed. The power balance momentarily shifted, only to revert, demonstrating a repeating financial paradox. Chaos strikes, institutions adapt, and the system endures. So what lessons can we draw from this? First, financial power isn't just about money, it's about control of the rules. When retail threatens that control, the system responds aggressively, often invisibly. Second, memes, social media, and online communities are no longer trivial distractions. They can move billions and influence markets. Knowledge, coordination, and culture have become assets just as powerful as capital. Third, every major financial uprising follows the same pattern: surge of retail power, institutional counterattack, and systemic reinforcement. Temporary victories reveal vulnerabilities, but rarely change the long-term structure. And the warning? The next wave may be far more sophisticated, combining AI-driven coordination, global social networks, and faster trading platforms. Internet trolls cost the wealthy billions once, but the battlefield has changed, and both sides are evolving. The open-ended thought: the GameStop story is more than a meme, it's a preview of how wealth, technology, and social coordination collide. Who will control the next surge? Will it be the decentralized crowd, or the institutions now anticipating every move? If you want to keep uncovering the hidden mechanics behind money, power, and financial history, make sure you like, subscribe. And join me again on Dollaroid, where we reveal the stories shaping your wealth before anyone else even notices.